Mr. Rule, hey, this is Sean from SGT Report and Rory on the line.
How are you?
Oh, we're terrific. How are you? Are you at work today?
I'm at home, actually.
That's your home.
Yes.
That's a lovely home.
Can you see me?
Yes.
Great. Okay.
There you go.
There you go.
Perfect.
Okay. Great.
Yes.
Now you're centered.
Okay.
All right. Well, welcome.
Thank you.
Did you ever watch the show 30 Rock?
I'm embarrassed to say until very recently, Bonnie and I haven't owned a television for probably 25 years, so no.
That's why you're so smart. That's good. All right. Well, I enjoy that show, and Liz Lemon, played by Tina Fey, one of her favorite things, because she's so smart, is to occasionally use grammar incorrectly as a funny aside. And so when she sees or hears a story about somebody having traveled somewhere fabulous, she'll say in a depressed voice,
I want to go to there.
And as I see your home, that's what occurs to me. Which part of Canada are you in?
I'm in the very, very, very best weather part of Canada called Carlsbad, California.
That's pretty funny.
Anyway.
All right. That's funny.
Oh, my goodness.
We could do, what passes poorly for comedy routine for a long time, but it probably wouldn't amuse anybody.
Well, you are a man of good humor. That we do know about you, and a straight shooter. So why don't we just jump right in? And if I may, I'd like to play a clip from the great George Carlin for you guys before we really get it rolling here. And guys, thanks so much for joining us. We have on the line Rick Rule from Sprott Global Resource Investments. Rick is the director and president and also the CEO of Sprott U.S. Holdings, Inc. Rick, we can't thank you enough for joining us.
It's always a pleasure. I love speaking to your audience.
Well, it's a pleasure to have you. We also have Rory on the line. How you doing, buddy?
I'm doing well, thank you.
Our last call with Rick, guys, was in February of 2014. I can't believe it's been almost a year since we spoke with Rick, and at that point we were talking about Rick's assessment that $2 billion in cash would gut the silver market and make silver short positions uncoverable. Rick, before we get started with the current state of affairs, I wanted to play a clip for you and Rory from George Carlin. And guys, for those with sensitive ears, cover them up because there are a couple of curse words here. But that's quite all right by me because George Carlin nailed it in his assessment of the American dream and what the corporatists would like to do with your money. Here it is. The reason I wanted to play that clip, and forgive the curse words, guys, and Rick, is because we have breaking news this week, big developments, that the CME gold and precious metal circuit breakers have been upped to $400 wide with memorandum S7258. Rick, we want to talk about that. We wonder what the CME is so worried about. Perhaps it's the lack of actual physical gold. And here's a big one. They know something is coming, and who is they? Well, it's the U.S. Treasury Department, which is seeking $200,000 worth of survival kits for its bank examiners. One wonders why bank examiners would need survival kits. And the reason I played the George Carlin clip is because of this one. Thanks to the criminal Congress critters, U.S. taxpayers are now on the hook for $300 trillion in Wall Street derivatives so that our warmongering government could continue to fund itself with $1.1 trillion in new funding expenditures thanks to the fascist friends on Wall Street. What do you make of that George Carlin clip? Rick, he was really ahead of his time, wasn't he?
He was ahead of his time in one point of view. I want to point out that the circumstance that you describe, and by the way, I think your description is absolutely accurate, is one that's unfortunately broadly supported across the government that we deserve, in this case, good and hard. But it's important to note that with the exception of a few people, many of whom are probably listening to this call, it's sadly extremely popular.
Well, I don't think our government is popular at this point, but to your point, we have gotten the government that to some degree we deserve, although I have fought against that theory to this extent in the past, and that is that the controllers tend to give us leaders we don't want. For instance, when they took JFK away from us, I don't think anybody voted for that, and they did it anyway as they headed us down this nightmarish fascist path ever since. But to some degree, I do think that the people do get what they deserve because look what we have in President Barack Obama, who won overwhelmingly in his first election there, and people overwhelmingly voted for him, and he's changed nothing since becoming president. In fact, it could be argued that our government has only become more fascist, more tyrannical, and more totalitarian.
He's a spectacular communicator, and I think, as you suggest, he's done a very good job of controlling the narrative of statism and convincing people who were predisposed, at any rate, to his point of view, that the state is the solution as opposed to the problem, and that collectivist solutions are the way out of a collectively inspired crisis. I certainly agree with you in terms of the broad reach of your thesis. I just point out, sadly, that it's extremely popular. When I speak at investment conferences or do webcasts, I'm struck by the fact that so many people in the country are comforted by the fact that the big thinkers of the world, the Obamas, the fans, have managed the economy so well since the global financial collapse of 2008. And are comforted by the fact that the levers of power in the economy are being so relatively well run. When I hear this, of course, I'm unusually, for me, speechless. But I am struck by how popular the statist mandate is.
Yeah, that's a good point, and I agree with you. And as we talk about the recovery and consider the Bernanke-Yellen recovery, what that has netted us is 45 million plus Americans on food stamps and a real run of unemployment, according to John Williams over at Shadow Stats, of closer to 23%. Let me ask you this as it relates to falling oil prices. What in the world do you think is going on with this oil market? Is it being manipulated lower to target China, to target enemies of the Western-backed dollar system? And the second part of that question is, I've heard that it's not good for the economy. I find that hard to believe because I know that I can fill up my car now a heck of a lot cheaper than I could a year ago. What do you make of falling oil prices?
I don't believe that there is a broad thoroughgoing conspiracy to depress oil prices. And I think if there was, that the oil price would go up. Remember that these same alleged conspiratorialists are the people who can't educate the kids. They can't deliver the mail. They can't win a war on drugs. They can't win a war on poverty. Real high oil prices are the cause for new low oil prices. What you learn in commodities is that the cure for high prices are high prices and the cure for low prices are low prices. Markets work. This recovery in the West is a recovery that, as you point out, seems to be missing jobs. It certainly, in the context of the jobs created, creates jobs that don't pay a living wage. As a consequence of that, demand for energy and many other commodities has been very, very, very weak since 2008. The very high prices that the oil industry enjoyed, and until very recently, for the last 5 years, has done exactly what you would expect it to do. It has increased supply, particularly in North America, and it has decreased demand. And if supplies increase and demand decreases, guess what happens to price? They come off like a boulder off a bridge. Now, the other thing to consider is that our alleged enemies, the Arabs, particularly the Saudis and the Kuwaitis, did a spectacular job in the last decade investing tens of billions of dollars to increase their productive capacity. These are the conspiratorialists that we thought were raising our oil prices. And the consequence of that is that they have regained their status as swing producers. The Saudis understood that by constraining their production, despite having spent $50 billion on productive infrastructure, that they were maintaining a price umbrella for less efficient producers. Less efficient producers in places like Russia that were trying to destabilize Saudi Arabia, less efficient producers in places like Iran, to which they have historic antipathy, and less efficient producers in places like the United States that were increasingly, from a Saudi point of view, backing out of an informal pact to protect the Saudis that existed for 50 years. So certainly the Saudis are less inclined to do us favors now than they were 10 years ago, and they are the swing producers. Sorry for that long-winded response, but the oil market is a big subject.
No, it absolutely is, and I appreciate your detailed response, because the follow-up to it is to talk about the derivatives market and the fact that now, and I cited it in the intro here, the American people are going to be saddled with derivative losses because I think this all has to do with the fact that a $40 drop in oil is really killing the banks with derivatives payouts. Ellen Brown has written about this over at her blog, Web of Debt, and she notes that once Jamie Dimon, the CEO of JP Morgan, got involved, it was at that point that this repeal of Dodd-Frank requirements led us down this path. And do you think the banks could potentially, the international banks, be in one heck of a lot of trouble because of these massively, unexpectedly falling oil prices?
I don't know if the oil price is going to be the event that pulls the trigger. But I'll tell you this, I have known some of these titans of Wall Street fairly well personally. And while they're very, very, very smart, the idea that they can manage $300 trillion in derivatives on about $1.2 trillion in equity,
I know.
They aren't that smart.
They literally can't reconcile the books at the end of every day. With the high-frequency trading and the billions and billions of shares trading hands every day that are supposed to be settled through the DTCC in a 3-day settlement period, it's unreconcilable. You can't reconcile these books when you're talking about a quadrillion dollars in outstanding derivatives on a daily basis. How do you reconcile those numbers?
Well, particularly with an equity slice that's well less than 1%. Warren Buffett, who is no particular friend of my regulatory point of view, has pointed out that if you have two very, very, very smart traders and they enter into a transaction with a 15-year fuse and 3 or 4 variables, and both of them book a profit on the day that they enter into the trade for quarterly bonus purposes, that there's something very, very, very wrong with the presumption of accounting. And I think that statement. The banking industry will tell you that the $300 trillion is a notional number. And in fact, the net number is much, much, much smaller to counterparties. But that, of course, assumes that the counterparty pays.
Right.
And that's an assumption that were I either a lender or a betting man, and I am both, I wouldn't make.
Yeah, and just so folks understand, when we talk about the Ponzi scheme and the house of cards coming down, what Rick just hit on there, will the counterparty pay, is the house of cards. Because once one counterparty doesn't pay, that affects all others on the receiving end, and it's a dominoes effect that could bring this system down. Rick, I wanted to ask you now, before we turn it over to Rory for a question or two from him, I wanted to ask you about the silver and gold market. What do you make of this CME move to broaden the circuit breakers here to $400 wide in the gold market? Zero Hedge had written about that story recently, and to their assessment, it speaks directly to the illiquidity in the market. And the question is, what does the CME know, and what do they possibly expect that would require circuit breakers to protect against $400 plus moves in the gold market on a daily basis?
The honest answer to your question, I'm embarrassed to say, is I don't know. I have been thinking through this circumstance for 2 or 3 days. I mean, certainly they had to broaden the band of the circuit breaker because the gold price over the last 15 years has moved from $200 or $250, up to $1,200. So certainly broadening the band of the circuit breaker makes sense. I believe that the CME exists to further the interest of the members. And I understand that leverage trading probably requires some circuit breaker support. It's interesting to me that they broadened the band. But the honest answer is, to be honest, I have no earthly idea what this means.
Yeah, and neither do we. I think we can speculate that they're just expecting, bigger price moves in the gold market in the future. And when taken in combination with this other news, like for instance, the U.S. Treasury is trying to find survival kits, purchase $200,000 worth of survival kits for bank examiners. You take all of this in totality, and you're left with the impression that everyone is afraid that this system could come crashing down at every minute. We've been talking about it for a long time, but here we sit now 10 months after our last discussion with you, with silver and gold prices lower than they were in February of 2014, I think. Gold maybe notionally lower, just slightly 0.5%. Maybe it's actually up 0.5%, but silver certainly lower. And you had commented then that $2 billion in cash would make silver short positions uncoverable, which is clearly true. I think that there's a lot of fear and agony in the paper silver and gold markets. What is your take on where we sit currently as you look at the COMEX and as you look at silver and gold prices, and silver specifically? Does it shock you to see us down here around 17?
No, it doesn't. We were looking for $2 billion, and we missed by 9 zeros. There was $2 available to corner the shorts, and I think the shorts are off the hook. I think the silver market, the silver future market, is in structurally pretty good shape. That's unfortunate. I would, just in the context of history and market drama, I would love to have seen a short squeeze in silver. That isn't what occurred. What occurred was a predominance of confidence, and I think that allowed the futures market to balance itself fairly well. One dynamic that we talked about 9 months ago, in fact, did come true, which was the increasing demand, price-sensitive demand for physical silver. And I still believe that you will see a point in time. Let me back up. I think you're seeing in metals markets now the classic thing you see in extended bear market bottoms, which is a movement of inventory from weak hands to strong. The weak hands in this case being the leveraged long financial institutions, not people that you normally think of as weak, but their commitment certainly is weak, into the hands of retail physical buyers, savers on a global basis. Any bullion or coin dealer that you talk to that has any sort of market breadth or significance at all will tell you that pick a market, any market, the demand for retail quantities of physical precious metals is extraordinarily strong. And at some point in time, and I can't tell you when this is, unfortunately, which is what your listeners want to know, my belief is that the physical market will drive for 6 months or 7 months or 9 months the futures market. And I think that'll be an extremely bullish development. But with regards to what we saw before, which was extraordinary tightness in the futures market for silver, tightness in the context of enormous short positions that we didn't see the ability to cover in normal trading if some buying came in. Those guys are off the hook, I believe. I believe they've I believe they've done a very, very, very good job and taken home very fat bonuses.
Okay, well, it's disappointing to hear that, but let me ask you this then. How do you reconcile the physical facts of, for instance, the SGE being gutted of physical silver? So we see physical silver being gutted in Asia, and simultaneously we see, as documented by our friend Brother John, and Eric Sprott has spoken about the manipulation in the silver and gold markets openly and consistently in his interviews on King World News. How do you reconcile what you've just said, which I believe you to be true, but how do you reconcile their ability to have gotten the hangman's noose off their neck, these shorts, with the physical facts? Well, just with the physical facts that this is all being done with paper manipulation, billions of ounces of paper being thrown at the market in some cases, more than's produced in a year, thrown at the market in a day.
I need to say, first of all, that I work at a place called Sprott. He doesn't work at a place called Rule. But further to that, I am less of a believer in an ongoing, thorough manipulation of markets. I believe that temporary and transitory manipulation take place all the time. But I believe that the weakness in the silver market and the weakness in the gold market, for that matter, is simply a function of very strong investor confidence in the US dollar. I happen to believe that that's misplaced faith in the US dollar. It's that faith in the global financial market and in the supremacy of a fiat currency, I would prefer to call it a liquid lie, that allows the temporary manipulation, which of course infests all markets, to fester. With regards to the disintermediation from the silver ETF to the physical market, that again is simply a function of silver moving from weak hands to primarily in the United States, but also in Western Europe, who like the momentum that silver exhibited in 2010, 2011. When that momentum turned over, in particular the institutional buyers who were long on margin, capitulated. They capitulated very quickly. At the same time that was occurring, the retail buyer who was buying as a saver and wasn't interested in manipulation, but rather was interested in physical silver, either in a safe deposit box or under the bed, took delivery. And it makes perfect sense that liquidating paper silver, in fact, in favor of physical silver, would result in precisely the phenomenon that we saw.
Okay, and I'm not disagreeing with you just for the sake of disagreeing with you about the manipulation, but I do just want to circle back and cite LIBOR. I want to cite the fact that we know the central banks are buying S&P futures to manipulate the stock market higher. We know about Deutsche Bank being accused of the silver fix manipulation, Deutsche Bank and HSBC. But the LIBOR specifically, we know that these criminal international banks are colluding together to make a lot of money by keeping interest rates artificially low. So I know that you're well aware of all of that. You know that the criminal banks are colluding in various different ways, correct?
I would dispute any of that.
Yeah.
My only dispute with regards to the conspiracy, the broad conspiracy thesis, that there is a tendency in some parts of the gold and silver community to blame their own failure on sinister outside forces. And I think that the most important aspect of lower gold and silver prices is simply a very strong US dollar, which is something that we all thought wouldn't occur. And we were simply wrong. The idea that the big trading desks, the big banks, and the big hedge funds don't occasionally on their own or as a group manipulate markets is silly. I've been around trading desks all my life, and they make their living on the delta between buyers and sellers. And if there's a way that you can artificially broaden the delta, that's the nature of what a trader does, legally or not.
Okay. Well, Rick, let me ask you this. You mentioned sinister forces. You mentioned that we were wrong about the dollar, and you're right. None of us expected the dollar to have this lasting strength. But when you were talking about sinister forces and the idea that a conspiracy theory or a conspiracy between parties is never long-lasting because they begin to turn on each other within a year, year and a half or two, I just want to remind everybody that the Federal Reserve was a pretty effective conspiracy that they managed to pull off back in, 1910, and finally got it implemented in 1913, the Rothschild-Warburg-Morgan conspiracy. And we're still suffering through that conspiracy to collude today. So although I do agree with you about us being wrong about the dollar, I disagree about the conspiracies. I do think that these criminal banks have humanity in their target. And we're all sort of paying the price for that in various ways with various levels of manipulation. But that said, you're right about the dollar. And I just said recently that gold prices are being kept low, but only for Americans because of this strong dollar, Rick. If you take a look at the Japanese yen, gold's up 14% this year. Take a look at it in euros, gold's up 12.5 or more percent. I think in the British pound, it's up 5.5, 6%. It's only because of this strong dollar that gold has maintained a low price this year, and I guess that's a good thing for those of us who want to acquire it. You know, we do have time to still get tangible assets in our possession to protect ourselves from this house of cards that I do believe is in the process of collapsing.
Well, you've made many points, all of which I agree with, by the way. The most amazing collusion that I have witnessed in my life has been the ability to interest rates to the point where they are in the United States. This is enormously popular, of course, because what you do is you penalize savers and you benefit spenders. And certainly in our society, there's a preponderance of spenders, not savers. But the ability to keep the interest rate well below what normal market levels would do has been the most amazing evidence of power, naked economic power on behalf of political forces that I've ever seen. And I have to tell you, it's enormously, enormously popular. Because there's more spenders than there are savers.
Yes, that's true in America. Not true in Asia, though.
I have no personal knowledge, but I suspect you're right, given the performance of the Asian diaspora here.
It's interesting because, so many folks here live hand to mouth, and I think culturally, we're not savers. Culturally, as Americans, we really lost our roots to honest and real money. It was really, taken out of our coinage in the 60s and taken off the face of our money back around the time of the Federal Reserve note coming into being. And so the average American is very detached from the idea of physical silver and physical gold being money. We know the Indians are proficient savers and prodigious savers, and they save a lot of their wealth in the form of gold jewelry, which to me is brilliant because you can wear it, you can enjoy it, you can look at it as a luxury, but it has lasting value, unlike that new LED TV you just bought and hung on your wall that you got at Costco for $2,000.
Agreed in every regard.
Rory, do you want to follow up with a question you have at all?
I do. I would really like to ask Rick palladium, and I would say, Rick, that you're one of the foremost global experts on this earthly element. And with the miners suffering the loss of capital inflows for the past 2 years, how do you see the palladium market evolving over the next 18 months or so?
There are three countries that matter in the production of platinum group metals: South Africa, Zimbabwe, and Russia. All garden spots, all with their own special problems. But the biggest problem that they have is that collectively, the price that they receive for precious metals is less than the cost to produce it, including the sustaining capital costs. And this can't go on. The other side is once again this recovery that we have, the same recovery that's taken down the oil price by $40 a barrel. In order to use up the surplus of platinum and palladium, which was sort of 15 years old, we need to sell more cars. We need to build more chemical plants, more oil refineries. What platinum and palladium are good for is reducing smog. If we get the type of global level of securities prices, stock prices in the general equities markets suggest, you will see sharply higher commodity prices across the board. You will see higher oil prices, higher gas prices, higher copper prices, higher zinc prices, but you will see sharply higher platinum and palladium prices because the utility that platinum and palladium offers the users is so great. Do you know, if you doubled the price of platinum group metals, it would all of a sudden cost $300 rather than $150 to sell a $20,000 car. The marginal cost increase is so small that I have no impact on demand whatsoever. But this is predicated on demand. We have the highest median vehicle fleet age in the United States. Part of that is due to the fact that cars are better now than they were 35 years ago. But part of it is due to the fact that workers' incomes on a real basis have declined for 25 years. If we have a recovery, then you will see the median vehicle age fall very rapidly, and you will see platinum group metals prices much higher as a consequence.
Well, I sure do appreciate your time, Rick. Before we let you go, why don't we just briefly touch again on the metals here? Silver, gold, palladium, platinum. What would your recommendation be for anyone listening? We have a lot of silver bugs in our community. We have a lot of gold bugs too. What would you recommend people do with some of their money with those four metals right now?
Savers certainly should look to gold. It's been a liquid store of value for a very long time, and it will be for a long time to come. Silver is good for speculators. If the gold price moves, which I suspect it will, although I've been suspecting it for a while, silver will move further. And in this particular move, I suspect the upside of silver relative to gold, the delta that speculators might take advantage of, will be exaggerated. The reason I believe that is because the market for precious metals is becoming so much more global. And cultures with an affinity to precious metals, I'm talking about in East Asia and South Asia and the Middle East and North Africa in particular, have increasing legal access to physical precious metals, which was prescribed politically for them for much of the last 50 years. And also the infrastructure exists to sell it to them. And what's important about that is that as poor people begin to save, silver is more affordable and will enjoy, I think, a larger part of the savings matrix of people who are newly able to save, not having been able to save for the last 50 years. So I would say for the saver, you look to gold. For the speculator, you look to silver. I personally am concentrating on PGMs, platinum group metals. I think they have all of the attributes of the other two metals, but what they also have going for them is a market, simple supply and demand. The utility of platinum and palladium relative to its cost in manufacturing operations is so high that I believe that it's a market that has to go up because they produce it at a cost that's higher than the price they sell it for. And it can go up because the utility afforded by it to the users is so high. I would submit to you, although I can't tell you when, that if the price of something has to go up and can go up, it will go up. And I can't say that about the other two metals.
Now, I do want to, because my audience will slay us in the comments if I don't follow up on silver. You know that we are largely silver bugs here, and here's the reason. We're the common man. We represent the common man here. We acquire physical silver because we believe it to be vastly manipulated, and we believe it to be below the cost of production for most silver miners. Our understanding right now is that a lot of silver miners are losing money on silver when it's priced below 19 or 20. And if you take a look at all of the precious metals you mentioned, I don't think there is one among the four that is more widely used in industrial capacity than silver. It's in everything from the circuit board on my MacBook Pro that I'm using to do this interview to the mirror that I used this morning. So silver is, like platinum and palladium, widely used in commercial applications, and we just believe it to be a great opportunity for the working man. Do you? I think you do concur at least with that much.
I do. I think in the American parlance, it's probably particularly attractive to the speculator because to the extent that the ability of people in East Asia and South Asia to save, an increasing part of their savings matrix will be in silver because it's more affordable on a unit basis. And my suspicion is that when the physical markets overcome the paper markets, which I think will happen, that silver will outpace gold. My only comment is that that's more of a speculative position from my point of view. I certainly agree with you as to the incredible manufacturing applications of silver. And by the way, I believe that the total cost of production for primary silver producers is higher than you suggest because they don't account on their income statement for write-downs that they took in prior years, although they spent the money. My suspicion is that the total cost of production, including expensed general and administrative expenditures and prior write-downs, is probably in the $24, $25 range.
Interesting.
I further suspect that if the economic recovery that we're allegedly in doesn't pick up speed, that decreased demand, if that occurs, for other industrial metals, base metals like copper, lead, and zinc, will begin to decline. And if that happens, byproduct silver will begin to decline. Remember that only 80% of this, remember that only 20% of the silver, new silver produced in the world comes from silver mines. The rest comes from byproduct production, from gold, from lead and zinc, and from copper. And if this economy doesn't pick up speed, and if you see zinc prices back down below $1, copper prices down in the $2 range, you'll see a fairly rapid decline in base metals production, and hence a concomitant decline in byproduct silver production.
How interesting. Well, I'm so glad that we bumped this out a little bit further because you make a great point about so precious few primary silver miners. And then in addition to that, when we think about the big picture from the 30,000 foot view and we imagine only 7 to 850 million ounces of physical silver being mined out of planet Earth on an annual basis, and 7 billion people on planet Earth that are waking up to the criminality of central banks and the paper Ponzi, and so many folks now waking up to the need to acquire physical tangible assets like physical gold, physical silver, platinum, and palladium. Seems to me that 700 million, 800 million ounces of physical silver being mined annually, if that number starts to even decrease down to 4, 5, 600 million, we are going to see this short squeeze that you talk about in the physical realm, because we already know the paper guys kind of control this market, and I think that's why you call silver speculative, because how long will they continue to control the market? We may disagree on the manipulation and the level of it, but we do agree that there's a heck of a lot of paper out there and precious little physical. Our guest has been the very kind, generous, and smart Rick Rule from Sprott Global Resource Investments. And Rick, can you tell people how to get involved with you guys? You're straight shooters. We love you guys at Sprott. Can you tell people how to get involved with you folks?
Absolutely. We offer a broad range of precious metals and natural resource products, investment products. You can find us on the web at www.sprottglobal.com. On the web page, look in the upper right-hand side for Sprott's Thoughts and click subscribe. This is a 3 times a week blog from the best minds in the Sprott universe, plus many other people that we know around the world. I guarantee you'll get your money's worth because it's absolutely free. You can also talk with us anytime you like if you're in the United States or Canada by dialing 800-477-7853. That's 800-477-7853 or www.sprottglobal.com.
Well, our guest has been Rick Rule, and our good friend Rory has been on the line as well, and his blog is thedailycoin.org. My thanks to everybody for taking the time to tune in. Thanks for checking us out at sgtreport.com and thelibertymill.com, where we try real hard to give you real news with real data, 24/7, 365. Have a great week, guys. Thank you, Rick.
Thank you.
And we really appreciate your time.
Appreciate the opportunity to talk to your audience.